The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another gorgeous day at the headquarters of Technical Trading and Investing, TFNN.com. We're going to probably have a quiet week as we go into Thanksgiving. When we look at the markets at the moment right now, up 2 points on the S&P cash, so no big deal. Of course, everybody's yelling and screaming on infotainment finance TV that we're above 4,000 on the NASDAQ. Up about 12 points. Actually, a little better volume than I thought, being at these highs, but 1.8 billion shares on the consolidated New York Stock Exchange tape is not exciting, at least to me. This is one of the more bearish things you can have, and that is going into a long weekend on very light volume. Normally, that is a sign that you're having shorts slowly cover. And when you come back, of course, if the market gets a shock, there aren't a lot of natural buyers just underneath it. So a lot of people think, well, you're going up here into the weekend, that's got to be nice. The actual problem is that you do have the people that are the shock absorbers for a market when it comes off. Of course, I suspect and said on Friday, this market is most likely looking and waiting for the numbers, Black Friday numbers, and going to see exactly what they mean. Just because the numbers are good, I think and they'll probably will be okay. I think the market will want to go up a little bit. What will be much more important are the numbers Monday. When we get a sense of just how well the margins stood up. How bad did they have to cut the margins to the bone to actually sell products? And, of course, we've already seen Best Buy announce that they're having their own particular issues, and they were off a few bucks when they did it. But you're going to see some others. But let's get into the snooze already. Hope everybody is doing very well, and as they say in the den, time for a low volume melt up. Okay, in history, it's not actually in 1935. It was actually, I think, in 1835, excuse me. Andrew Carnegie, future Steel King, was born in Scotland. Carnegie came to the United States when he was 13, developed the steel industry for America's railroads in 1901. He became the richest man by selling out to J.P. Morgan for $400 million. At his death in 1919, he'd given away $350 million of it, and of course had his own place and hall. And of course, without him, how would we have that great joke? How do you get to Carnegie Hall? Practice, practice, practice. But it is always one of those wonderful things to think about. People that went before us in finance. Let's see. Let's go out here and see what we have. Wanted to talk, especially with a quiet market, about how we think about the stock market. And I was listening to some scientists discuss what consensus actually meant. These were from I think the British Science Association or I think it was a British Royal Science Association. Sounded pretty knee deep in the PhDs, but they brought up something I hadn't heard for a while, and it had been around in the annals of science. Most people in grade school learn the scientific principle, but what they don't understand is just how much science is built on something called consilience, not consensus. Consensus is never science. People can believe all they want, but when you have the scientific principle put into work, and you actually do it with a evidence of concordance and a little bit of thought, a lot of unrelated sources will converge to give you strong conclusions. And I thought just how much that is like the stock market. We can have one indicator telling us one thing, but it's really the concordance of all those things. It's not whether the market has a consensus for earnings and a earnings date. It's what the actual numbers are when it comes in. But the idea that either science or a market runs on consensus is kind of interesting to me. They were basically talking about it in scientific principles. But just that, and they gave some fairly decent discussions about court cases. It's not about one piece of evidence. It's generally about all the evidence. It's not just about having a Gartley pattern. It's having a Gartley pattern with the right volume. It's not having a Gartley pattern just with the right volume. It's having a market with just the right volume and a sector with just the right volume. And when you put it all together, you get that convergence of many different things. In science, they'd give it this way. They'd say, the distance between all the pyramids. They may actually use a compass and try to figure it out through triangulation. They may also use a satellite shot where they have objects of known size and duplicate it that way. And you may find 3 or 4 different ways of actually measuring the distance between all the pyramids in Egypt, and that's how they know the difference. It's not just one measurement, but a lot of different measurements. And one of the things I probably will say more from now on, and that is consilience, a convergence of evidence or a concordance of the evidence. A lot of times in science, you'd be surprised how many things can't be tested. They have to be, for the most part, inferred. And again, we're in the stock market, we're that way. But we just have to worry about it. The reason that this brought this up was how far science had gone down the wrong road and how it started, actually. In fact, there's a great speech by the gentleman that wrote a lot of great sci-fi movies, starting with the Andromeda Strain, and pretty much, I think his last big movie was about all those little pesky dinosaurs roaming the Earth, again in the 2000s, coming from the amber and DNA inside of it. He had a famous speech in 2002, and he talked about where science started running off the rails. And I think we can probably apply this actually to trading too, especially technical trading. He says that actually the market or the science started to run off the rail in 1960 when a gentleman named Drake decided he was going to set up a search for extraterrestrial intelligence and came up with a famous equation. The problem was that every input on the equation had to be a guess. There was no way to know whether the answer was 0 or 100 million. And while he had a fancy looking equation, there was nowhere and no way ever to make sure that that was correct. It gave a boost to SETI, and a lot of people gave it legitimate intellectual inquiry because of this wonderful formula that actually meant nothing. Of course, a lot of times we have to measure, and there's only a handful of things we can measure in the stock market. Price, volume, some of our technical indicators. Sometimes we can look at just how bullish and bearish a market is, and sometimes it's some of the times I've caught the market at the best times is when everybody's talking about it at the restaurants. But the only way when you have to use an equation is use guesses. Probably not worth a hill of beans. And of course, later on, Carl Sagan came along. He came up with a bunch of hooey about nuclear winter. Now, who knows if nuclear winter would have actually occurred if we had the Holocaust everybody was talking about in the 70s between us and the Russians. But once again, he came up with a wonderful equation that was meaningless because no one can measure any of it. Again, we get back to that whole consensus. Everybody was sure that his nuclear winter projections were fine and were going to work, and it had to be that way, and so we better not blow ourselves up. Well, again, Michael Crichton, who gave that wonderful speech at MIT, said that nobody says the consensus of scientists agrees that E equals mc squared. Nobody says the consensus is the sun is 93 million miles away. It would never occur for anyone to speak that way about consensus. Richard Feynman went in and called models a disease. And why I think we can learn a lot from models, we cannot totally trust them. It's why I don't work on a black box. Black boxes are good and fine. They always have to have a human standing next to them. Richard Feynman, of course, one of the keys to the atomic bomb, and later on probably the physicist for the last half of the last century, giving speeches that really influenced most of the scientists, especially physicists out here. But he was kind of very interested about how anybody could have a projection for weather even 12 hours ahead. Michael Crichton in 2002 said, now we're asked to believe a prediction that goes out 100 years into the future. So far, the predictions from 1990 were totally wrong with the models of global warming. In 2000, they've been totally wrong. In 2010, they were totally wrong. And now everybody's pretty much saying those models probably don't work. At some point, we need to know when these models don't work, and of course, that's a stop. At one point, you just have to say, whatever I believe doesn't work anymore. Scientific principles maybe can help us out a little bit. One of the things we can use the best is testing. Statistical and applied probabilistic knowledge is the core of knowledge. Statistics is what tells you if something is true, false, or merely anecdotal. It is the logic of science. Nassim Taleb said that in Fooled by Randomness. And one of the reasons why I love his book, it really brought me back to looking at statistical inference when we're looking at what markets have done out there. Anyway, we're going to talk a little bit more about the news here, but just a thought that maybe why it's calm and it's quiet out here, we can probably have a better thinking in the way that we interpret the stock market and know that things are constantly changing. Models aren't perfect. If they were, I'd be on the beach in the Bahamas right now. We'll be back in a minute.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we're thinking about maybe more science in trading today, I had a quote that I read in one of the early books of Thomas Woodlock. He was one of those traders that traded around the 1900, 1930 range. It's been a while since I read his book, probably time to look at it again, but I did write this down. The principle of successful the principles of successful stock speculation are based on the supposition that people will continue in the future to make the mistakes that they have made in the past. And Thomas F. Woodlock. In a nutshell, that's probably it. It is one of those things where we're looking for the mistakes of others. Most of those are probably based on biases and not real. All last week, there had been rumors that PrimeSense was going to be bought by Apple. They'd gotten to a fever pitch last week. They'd actually been around for over a month. I never really brought them up because there was no real way to make any money on the deal. Apple wasn't going to significantly change by them buying them, and PrimeSense is a private company, although heavily backed by several venture capitalists. Very interestingly, they sold it for about $350 million, which seems kind of tame in this world. What they make is the kinetic and designed were the early routines and hardware for the Kinetic for the Xbox, and of course there's a newer Kinetic for the Xbox One. But Apple getting into this business seems to me like they are looking at what Microsoft is doing and saying, hey, we've got to get into this game fairly quickly. All of this is in the area of what is called a NUI, NUI, Natural User Interfaces, and probably with or right after the Xbox One had been shown at a lot of new gestures that were working without touching anything, just waving your hands in the air. Apple, within a couple of weeks, had started to go to this small Israeli company that actually had given most of the routines and basic stuff for Microsoft to go out and develop their own interface. And kind of interestingly enough, Microsoft doesn't really need these folks anymore. So they weren't really in the bidding. They pretty much had sucked everything out of PrimeSense already. But of course, Apple really doesn't have anything in that same vein. The belief is that they're going to try to put this in to any kind of product that would be called Apple TV. But kind of interesting that Apple made this small purchase out there. The other thing I thought interesting over the weekend where the numbers were out for the price of electricity. It is now the highest it has ever been. In October, it was 13.2 cents per kilowatt hour, up from 12.8 cents basically a year before, and up from 9.3 cents in 2003. So electricity continues to run much higher and higher and higher, and of course 13.7 cents between June through September 2013 was the most expensive electricity has ever been in the United States since they started tracking electricity prices in 1978. This is a tax, especially on the small guy, a guy that didn't make much money to begin with. But there's always consequences, and us basically getting out of the coal business in the United States has been the majority of that change and higher cost to consumers for electricity. But that's also business. That's also steel makers. That's pretty much everybody out there. Kind of interesting. Bitcoin's still getting a lot of yelling and screaming. The biggest, by a factor of at least 5 or 6 single sale of Bitcoins went through over the weekend. It is supposedly around $25 million. This comes from the Washington Post, and maybe setting up what we think is a this transaction is more than 150 million. Excuse me, at $800. But I don't think it went through at $800. But we're starting to see a lot of people leave Bitcoin. This transaction, everybody thinks, actually is one of the brokers getting out and moving their Bitcoin somewhere else. But very interestingly enough, if you think you're totally anonymous at Bitcoin, they were actually able to go track this back down to the Bitcoin broker by the ledger that is publicly available. So not as transparent as you would think. Anyway, we'll be back in just a few minutes.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, we're going to look at a few stocks. Probably the most interesting ETF that I'm looking at right now is the ProShares Ultra Russell 2000 UWM. We're coming up against the previous high, which is October 29th, 79.63, with 550,000 shares. When we came in and looked, 178,000 on Friday, and same today already? 130,000 today. So very, very light of volume. Of course, market the same, still under a little bit of under 2 billion shares on the consolidated New York Stock Exchange tape at 1806 on the S&P cash, which is up about 2 points. So don't be surprised if we kind of tread water into Wednesday's close and the volume gets lighter in the next 2 days. I think it's all about sales numbers, at least for the end of the year in this market. We have probably about 1 or 2 days next week, probably late Friday morning. I think we close at noon in the equity markets. And then Monday, the reaction to first blush at what people are spending money on. But other than that, we probably don't have a lot that would move this market until the first couple of days of next year. Might see people hanging on to their stocks, trying to push at least the taxes into next year somewhat. But certainly doesn't look good for that particular ETF. Okay. So what else are we going on? There's a few stocks I want to look at, and then we're going to get in the stocks that actually have moved today. Let's see. American Capital Agency. This one's been banging around at the bottom with a light volume. This actually kind of starting to move back into the trading range. I haven't had a chance to really figure out what these guys do yet, but certainly one of the few stocks out here that's making a bottom that is drying up. American operates real estate investment trusts. Most of the investment trusts are continuing to go down fairly strongly. This is one of the few out here with significantly lighter volume out. The first time we had 21 million shares on July 5th. Tried to get into it on August 19th with 15 million shares. The last couple of days we've had 5.8 million shares, 5.9 million shares, and today about 5 million shares so far. But kind of interesting. A lot of these ETFs that were REITs have been taking it on the chin for a while. Some of the stocks up at highs with very light volume. Domino's Pizza, DPZ. I get a lot of emails from them about specials, and I'm wondering how much of these specials are actually into their business. You know, I can pay, I think it's tonight, I've got a coupon to pay, I don't know, $6.50 or something for a large pizza. Normally about $14 on the weekend. Is there any kind of product that's got that kind of range in price between weekends and the weekdays? I think Monday through Thursday I can get it for $6.50. Man, what a huge range. Anyway, another one that's up here testing very, very light voluming. And again, today, 241,000 shares so far, going into those highs of October that had 840,000 shares out here. Of course, always when winter hits, everybody likes to order their pizzas. But what can you say? E-Trade, another of these broker-dealers are hanging up here with very light volume. We're getting into the point where they can just let them hang out till the end of the year. But E-Trade, ETFC, interesting, in this thing banging against its highs. Originally with 7.5 million shares. We get into the November 14th high and break the high, close below it, 3.6 million shares, and a very light volume the last 3 days. One of the ones that is weakest out here. Having several stocks back out at these lows in gold. And of course, gold was off about $14 earlier this morning. Came up, didn't seem to have a really bad day today, but recovered most of its losses. But still doesn't look to me like this thing is over. Still looking for a big washout in gold. These gold stocks need to come back just a little bit farther to test their lows. And that would be very interesting on IM Gold. IAG, that would be the June 26th low at $3.81. Somebody in the den IM'd me about Gold Corp also. Another one making a very light volume lows. This thing had one more penny to go to test the low, so it still hasn't tested it. But so far today, about half the volume. You want to be looking back at the June 26th lows at $22.22. 1 penny shy today with 6 million shares. So is that enough? If we closed with 6 million, I'd say so. But probably still doesn't look like it's all gone away. Everything in these gold stocks is starting to line up for some kind of buy. Really starting to see the energy on these down legs really start to shorten up and be a little bit more choppy than long, huge downtrends. And of course, breaking those previous lows on lighter volume and even making a doji. Not so bad on Gold Corp today. Other stocks of interest, Kindred Healthcare, KND, looking at some of these healthcare stocks and seeing what's going to happen in that whole field. Of course, it's about as muddy as you can get, but this one's certainly not having any kind of volume. The previous high was August 6th, $16.63, 1.7 million shares. We've got into that on Friday with half the volume, less than half the volume, with 800,000 shares and just less than 300,000 shares yet today up at those highs. So keep an eye on those. What else would I want to look at? There were a few others. Interestingly enough, what do we have out here? Almost all these social media stocks are very weak today. It's starting to look more and more like a fad. Yelp was probably the instigator about that today, but it was off as much as almost 8 points, or 8%, excuse me, today, not 8 points. And it's come back and actually filled the gap. That gap happened on the 6th of September with almost 8.8 million shares. 5.3 million shares today. There's still one more gap down around these $45. Now remember, these IPOs almost all have lockup periods, and certainly Yelp goes back to November of 2012. So we are just going through 1 year. Normally that lockup period is 180 days, so you're normally over that. But I'm thinking if I go back and look in it, Yelp also had some additional either secondaries or floats with those, and maybe they're coming up yet again. But for a day when the majority of the market's not doing anything, we actually do have one that is coming down on increased volume, and that is Yelp. This has kind of affected the rest of that whole sector, which is Facebook. This thing, if there is a fad stock in social networking, it's got to be Facebook. This huge gap back down from $25 to $34 probably at least is going to get tested. I suspect it gets tested in the first 3 months of next year. Getting back to finding out just whether or not Facebook can actually hold the amount of advertisers that they had over the last 3 months. And the answer for the most part is probably no, but it doesn't. It's real tough right now to see just what percentage of those advertisers on their new mobile platform they're going to be able to keep. Off, and of course a volume up just a little higher. Of course, they're not the only one. They've infected everybody. Twitter down a little bit today, but LNKD also feeling the sting of that at least a little bit. This thing's been banging away at a gap that happened on the August 8th. That gap came up with 7.5 million shares, and it's slowly been trying to work this thing out and sideways. But pretty much you're going to see, looks like about 208 is where the support level really comes back in on LinkedIn. And of course, the volume's been dropping at these last two lows. What you'd like to see is about 1 million shares back at 208, and you might have enough for a retest of the top back up to 257, and maybe that's the last drive for that stock. But certainly going to be interesting. UBNT. China was down a little bit, not bad. But we did have some stocks out with earnings. One of them is Quaihu. A lot of people I know talk about this one in the den. Earnings were not good. And I think a lot of people that are depending on China sales, like Colonel Sanders and a bunch of people that thought the sun couldn't set on the way China and the way that they would make money in China, finding out it's a little different. Quaihu, of course, is a China company, and very tough for American companies to at least be in this space. Even Google said that they left because it's impossible to make money in China. at least for what they do. Kuaihu 360 technology, of course, web business in China. Still looks like this thing needs to get back down to that 74 level one more time. What you really have to dislike about the stock going back is the October 9th low, 3.9 million shares. You get back in that with on October 28th with 5.9 million shares. So probably good indication that you were going to at least get back down to the $75 level one more time. Keep an eye on it. You can always give me a call at 877-927-6648. That's 877-927-6648. I know it's quiet out here, but we do have some stocks moving. I suspect that the play around TFNN is going to be on gold fairly soon. And RGLD. Let's see how some of these other stocks are doing. Kind of light. Actually, a little bit more volume than you would like in Royal Gold. The last low at $45.15 with 1 million shares on October 15th. We are coming to that, and actually pierced it this morning. But volume's not going to significantly shrink. We have 830,000 shares already, so you could probably say equal volume of the last move. It's going into a gap area that had 1.3 million shares in June of, July, 22nd. So you're about 30% lighter on volume. Probably not a big deal in something like Royal Gold. You'd really like to see probably 500,000 shares. And, of course, still have an untested low back to the June 26th low. And that's at $38.63. I still have a feeling that we're probably going to see some kind of movement to push these stocks down one last time and wash out a lot of folks. But this is starting to look fairly decent for the moves. Energy is starting to come out of it. At least the glide angle for a lot of these stocks is starting to flatten out. Now, could we see the movement right now in gold? The answer is yes. But to be safe, probably to be a little bit conservative, it would be so sweet if we could get back down below $1,200 once again. And look at a few of these. What else did we have moving out here? SDRL missed earnings. Seadrill Limited. Let's get the full profile on these folks. Certainly an ugly day for this stock. Giant candle, giant volume. Seadrill Limited. Offshore drilling services to oil and gas industry. Part of that was earnings. I suspect that part of it was the so-called deal made with the Iranians over the weekend. I don't think anybody would have listened to this show very long before they would automatically know my opinion of that deal. It's not worth the paper it's written on. And, of course, most interestingly enough, we don't get to actually go and inspect. They're going to send us some videotapes. And, of course, those guys are wicked with Photoshop. I can only imagine what they're going to do with video recorders and showing us what's going to happen in those nuclear facilities. Basically, the administration wanted one win. Didn't matter if it was a fake win. They certainly got it and threw the Israelis under the bus on this one. But we're going to have the probably likelihood of a nuclear Iran sooner rather than later. Anyway, we'll look at this a little farther when we come back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we've got people talking about buying gold. There's a few stocks out here that were kind of interesting that had Gartley patterns. AU was one of them a little while ago. And what can you say? Diebold. Waiting for something to come up here. There we go. And HBHC. You'll see a few of them out here. This one's probably the most interesting. Of course, if you get timing, or the art of timing the trade charts every morning, you get shipped to you the charts with Gartley's forming out here. One of the interesting ones out here is HBHC. This thing's coming into a gap. Just about everything is fairly interesting to me. If we look at it a little bit longer, what you really want to do is come back and look and see just how this gap came in that this thing is working on. And you know, this thing works pretty good well with Gartley's. I was going to show you that the last Gartley in this thing worked almost perfectly. It went and did a butterfly and sold right off. Went and did pretty much a 50% retracement in it. But what we really want to be focusing on out here is this last gap that this thing's coming into. 2 million shares on, what is that, April 27th. So when we go back and look at these 4 million shares, and of course you really can't get any kind of volume the last 3 or 4 days out of here. 458,000, 300,000, 500,000. Interesting chart. The profile in this company is a little bit different, and that is financial banking services in Mississippi, Louisiana, Alabama, and Florida. So I'm going to be watching this one closely. It's probably going to tell us a lot about what's going on in the financial community down here in Florida. But any of these companies that, especially in the Southeast, that do have issues, a lot of these banks have a lot of retail notes still on the books, and my understanding is that the Fed is going to push these guys to at least liquidate them finally in the next few months, and that this is up here is rather interesting, especially up on very, very light volume. Anyway, we've got about 2 minutes left to go. See if there's anything else I wanted to take a look at. Probably let's get to one last look at what our price and volume is doing on the S&P cash. Up 1 point. Just under 2.1 billion shares. And again, probably going to see this, and maybe we even see 1.5 billion at the end of the day on Wednesday. Other than babysitting maybe a few trades, probably a good time to take a rest and keep your eye on gold, because I have a feeling that is where all the action's going to be over the next few days. Maybe a little bit in crude, but for the most part, if we're going to get any kind of huge money-making opportunities out of here, probably between now and Friday morning, probably all going to be about gold. Of course, Tom is going to be back with us tomorrow night, and maybe he'll have a lot of stories to tell about what's going on in the gold show. We'll see. I'm going to have a special out later this week. It will probably be up on Tiger TV before Friday. It will re-air normally on Friday when we close. It's going to be all about technology you can buy for Christmas presents, and the neat stuff that's going to be available. So make sure and check that out. I don't know exactly when it's going to go up, but probably by early Wednesday night. So over Thanksgiving, you get an opportunity to see what I think are the hottest toys, adult toys. Well, regular electronic adult toys. Well, that didn't sound any better either. Bye.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.